Hello back, everyone. Last session, we talked about the how to define market structure in the lower time frame, which goes hand in hand with higher time frame leg and momentum. So you're just using higher time frames, leg and candle momentum analysis and also market structure based on Fibonacci in the lower time frame to just confirm that your understanding about market cycle is correct. Now here, to just review the previous lessons, actually ideas and concepts. So I'm going to just give you one more example, and later we're going to talk about the zones and zones in zones. Now look, here we have a choppy kind of, it is not as neat as the previous one. So here we had this actually tight range and tight channel actually, and later we have this normal channel, tight channel, later normal channel, and sideways and choppy, and later we had what? We had change of direction. Here we have a little bit more choppier than this one. That's why we're going to use what valid swings here, right? Now, if we want to use this Fibonacci retracement, so we have this retracement to 50% here. If you look at this one, it is 50%. So this purple one. So later, afterwards, because we cannot break the swing, okay, here, low swing here. So we plotted our non-standard Fibonacci. So our retracement was at least 50%. Later, we couldn't just go down, and we went back here. So it is taken there. But before we do that, each of these legs, okay, here. So if you want to just plot this Fibonacci here, I haven't done it, but if you do it, it is 50%. So, and if you have done this one, it is more than 50%. It means that the structure direction has changed, and direction should be on higher time frame should be changed, right? If you look at this one like Gann swing, so if you just consider the trend lines of this in mind, you don't need to just draw any trend lines because it's going to confuse you. So if you just consider the legs in the higher time frame, so it's going to give you a direction that you won't get confused. So now here we have again 50% or more retracement. We have 50% at least retracement, almost 50%. Here we don't have it. Here we have 50% retracement, even more. Here we have 50% retracement, even more. So look, if you look at this chart, and if you look at the Fibonacci's that I have plotted here, look, here we have 50%, right? Here we have more than 50%. It is taken here, right? The market has changed the direction, in the bigger scale, larger scale. So here we have 50%, right? Here we have 50% and more, 75% here. So here, if we just compare Fibonacci's, this is the only scenario we don't have 50% or more, right? So do you remember last time I talked about cycles? So I said that more than 60 to 70% of the market, or even sometimes 75% of the market, is choppy or sideways or wide channel. Okay, so if you just focus on 75% of retracement, so you would get good trades with good risk to reward. So to the if you have some actually losses, these rewards will make up for that. Okay, now. Enough about these, and I'm going to put some exercises this week at the end of this week. So you're going to start your exercises. I will share the links in the description, so you will click on it and do the exercises. And I will just give you the video explanation of answers of all the drills you have done. So you will compare your exercise with the drills I will explain to you, so you won't get any confusion later. Now, this is time to talk about the zones, okay? Fail to return, FTRs. So we're going to call them FTRs, fail to return. So if you just consider this a lower time frame movement, so this is lower time frame movement, it is going up and down, it gives a pullback, and it goes up again. This is our extension or impulse or whatever you want to call. This is move, this is a pullback. Again, we have another pullback here, and without before it takes down, it goes up here. Now, here we have last lower high in this pullback, right? So here we have lower low in this leg that is coming down, this trend that is in low time frame. So this is taken. So we put a new higher high, and we have higher low because of this higher high, right? Now, if we plot higher time frames leg, Gann leg or valid pullback, we have this movement, this movement, this movement. We don't have the details, these details that we have in the lower time frame, right? And it continues like this. So you can see that 1, 2, 3, 4, and it goes on, right? So now, if you just have this time frames details, we have higher high here, higher low here, okay, and we have higher high here, new one, which is taken by this, and this one is higher low. Okay, now if we put our Fibonacci, our retracement was on 75%. Let's imagine that, okay? So then this is our zone. What is this zone? This is our valid pullback zone, okay? Valid pullback zone. This is our overbought, oversold zone. In this case, this is our oversold zone. So we need to buy here. But where? Am I supposed to buy here? Am I supposed to buy here? Am I supposed to buy here? How could I know that where I'm supposed to buy? Where is the end up pullback? That's a big question. That's a $1 million question everybody is looking for the answer for. So here I'm going to help you to find some answer. It is not going to be 100% because no strategy works 100%, but it works very well. So to define that, not only we are going to have this over valid pullback zones, okay, here from there to there, we also have zones inside the zones. We are going to just zoom in inside, and you will see that if we just put this last lower highs swing, which is taken, and if we put this trend line, static trend line here, we have one break of it. Again, it comes back. It cannot go below this this swing or later higher time frame swing, right? Because usually lower time frame is faster than higher time frame. Before you can have higher time frames candles, your lower time frame has already formed any all of the movements. So it cannot take lower low of this lower time frame, but it could take the higher high that it was formed. So then we have 1, 2, 3, and this is not complete yet unless it is taking. It is very, very, very important. So 1, 2, 3, 4. So what are they? They are forming another zone here. We call them fail to return, right? We call them FTR. This one is our true SNDR, okay? Supply and demand zone, right? So you can expect the return of the price to there. And after the market is returning there, you're going to see that end of the pullback, there will be accumulation phase here. There will be weakness here. If the you have to just check the momentum of how the momentum is approaching this area. If it is strong, it is probable that it breaks it down. It goes through this one. But if it is not strong and it shows weaknesses, so it may sweep this liquidity down under this fail to return or FTR and moves on. Okay, so we will come to the triggers and confirmations later. But for now, this is the most important area that you're looking for any taking trade. I think this video is the most important video after market cycle. The most important thing before doing this, you have to define what your market cycle is. You have to choose that you're not going to be a trader who is trading 50% of the moves or 25% of the moves. You're just trading 75%, 80, 100%, or even choppy markets, right? This is the hardest ones, but they are more luxurious ones because they happen frequently in the market. If you know how to trade these ones, it is easier to trade 50% than 25% retracements ones, right? I mean that tight channels and normal channels. So if you know how to trade wide channels and sideways and even choppy ones, so it means that you're super professional, right? Now, this is our FTR zone. If you look at it now, this is the one, okay? This is the last zone we have. Okay, I have to just talk about this one. This is the last, I mean, the lowest price you can see here, okay? Which swing just led to this one? If you just consider this one or this one, it doesn't matter, okay? If you consider this one, okay, if you just take this one, it is lower FTR again here. So we have sweep of it and movement of the market, right? If you consider this one, it doesn't matter. We just take after it's breaking, highest point and the lowest point before it breaks down. And before it breaks down, it breaks up, right? So this is our highest point after breaking, and this is the lowest point. Later, it breaks itself. 1, 2, 3, 4, right? So 1 up, 2 down, 3, again up, breaking itself. It is not enough yet. It must break a higher high here. Okay, this is our FTR zone. Another scenario, so we have a break. This is the first thing is that every, I mean, step by step, if you want to just find it, the lowest or the highest part in the, I mean, bearish FTRs, you're gonna just look for the highest. If it is the bullish FTR, it's gonna be bearish. I mean the lowest. This is the lowest part on the chart, right? So where does it come from? It could come from here. You can consider this one. You could consider all of this candle. So I will explain that later as well. So, but if you just compare this, I mean, swings that it is clear and visible, okay? So even that one, you can consider this small going and coming inside candle or the bigger one, okay? Even if this one was better, okay? So later, after you become professional, you will take these ones which are valid than this one. We call them minor, major. So minor ones are the places that the most of the decisions are made. Okay. So and it has high win rate, like more than I could say 80% or 90%. Okay. So 1 up, 2 down, 3 up, 4 break. 1 break, 2 down break again, 3 up break. So if we have the bullish FTR, sorry, if we have bullish FTR, we have 1 and 2 break up, 1 break down, right? And later it is confirmed. So 2 break up, 1 down. So again, here, another scenario, lowest part here. Okay, not this one, even if this one has also FTR. This one has its own FTR. Okay, I'm just giving you example. The market is full of FTRs. Okay, so 1 up, 2 down, 3 again up. So 1 and 3 is up, are up, and the last one is confirming this FTR. Look at the reaction. So also here, if we go up, we have reaction here. Not only there, also here, reaction, we have it. So if it goes up, we can expect to price come and take this liquidity down here, okay? So now, another example, look here, lowest, place that the price has experienced is here. So 1 break, down, up, again, it is confirmed. So you could take this one as well. So if you haven't taken this one, you can take this one. If you have taken this one, you could take these ones, okay, the reactions. So you will, how do you take these ones here? We will just look at the approach. How does this approach the zone? Okay, does it approach with very high momentum and without any pullbacks? Right? In higher time frame, you could see that overlapping is almost nothing. Yeah. So it's just going through this one, right? And it breaks this actually last line of defense of, buyers. So sellers are concurrent them. Here again, look, we have this one, and it happens in all time frame. Here we have in candle scale, yeah, the lowest part. Okay, you could consider this one if it just overlaps. So up, down, up, again confirms. Yeah, all of them happen in 2 candles. We have the sweep of it. Later it goes up, and you can take this one. Okay. Now again, up, down, again up, break up this one. It is just playing here a little bit, confirms. So later we will have any reaction here. Do we have any reaction? We don't see it on the chart. Maybe we don't have it. So we said that we are not going to expect it to work 100%, right? But it works enough, and it gives you enough reward that you don't need any other setup, because you just need 1 or 2 or maximum 3 trades a day to become actually a millionaire. Yes, 3 trades at maximum. So again, lowest, it experienced. You could take this one. It doesn't matter. You could take this one, this one. Okay. So this is clear. Okay, clear U-turn. So 1 up, 2 down, 1 again up, and confirms. So you could take this or this or this, and reaction goes on. So here, lowest and price here. This one goes up, breaks, and reaction. So now fail to return for downtrend. The same scenario. I'm not going to bore you to tears, so I'm going to explain this one. Okay, now look. Here we have our valid pullback zone, right? So this bearish scenario. So this valid pullback zone is our overbought, oversold zone. Okay, here we have overbought, sold. So if it is overbought, we're gonna sell that, right? We're looking for FTR inside this our valid pullback zone, right? Look, in higher time frame, we have lower low, higher low, lower low, higher low. So in a lower time frame, we have in this leg, we have last a higher low, higher high. This is our Fibonacci, and this last higher high led to this highest price ever experienced in this scale, right? Now, if we just see which one, what happened here? Look, 1 down, 1 up, 2 down, and it is confirmed, right? So when it is downtrend, we have 2 breaks down, 1 up. When and later it is confirming it's a break. So here, last swing low is formed. We have also, it is broken, right? Now this is our FTR zone. So we have a valid pullback zone, which is bigger. This is our FTR zone, so which is smaller. Now look at this one, the real market. So I'm going to use both of them at the same time. So look, this is, let's go from here. It doesn't matter. You could continue from here, there, or, okay, let's continue from here. This is our valid pullback zone. Now, second valid pullback zone. I'm not going to just explain this one. I'm going to just explain this one because this is the highest price it is experienced ever. But you can also use these valid pullbacks and zones, FTRs inside this valid pullbacks here as well. So everywhere it works. So for having higher risk to reward to risk, we're going to use this one. Now, here, our chart in valid pullback is formed here. Okay, this is the flip of our, look, if we go back, this is our last valid pullback, right? This is a bullish valid pullback. But look what happened. It breaks down, right? So if it is breaking down, this one becomes our valid pullback, which is flipping or bearish. So we don't have this part yet, okay? And it is not broken by actually candle close. So this area is our what? Valid pullback zone, the highest price ever experienced, right? So now let's go and find FTR inside this valid pullback. Okay, look at this one. If you consider this one as your this swing led to the highest price right here, or you could consider this one. It doesn't matter at all. Okay, so both of them have their own reaction. So if we plot this, this is our FTR inside our valid pullback zone. Or if you just consider this one, we can plot bigger one, right? I mean larger scale. This one. So this is the scenario I talked about, minor, major, right? So we're not going to take it when it is reversed. We're going to just have the confirmation candle and later trade it down, okay? You could trade it here, okay, in this candle. You could trade it here in this candle till here, or you could wait for this one. I mean, this one, first time back, second time back, and third time, it's going and it's forming a kind of a channel. Third touch is when it is coincides with uh, uh, actually liquidity sweep, or it is with another SNDR zone. The third touch is bearish signal. You could take it here, or if you're late for the party, you could take it from here. Okay, it doesn't matter. It is the from here, this one, or there. Okay, anyways, it's gonna work. So this time it is inner, yeah, valid pullback, which is bullish, yeah. When we have break of it, so we have what? Bearish scenario again. So if you don't practice, you're going to get confused. But if you practice, all of these make sense. Okay. Now here we have bearish scenario. We're looking for here FTRs. And after sweeping FTRs, we have this bearish movement down and it goes on. So if you don't plot anything, it's going to look like this one. So now let's go to the bullish scenario here. Okay, I know the length of this video is a little high. I mean, there's no I can do. I have to just explain and finish the idea. So now look, we have this lowest price ever. Let's plot our valid pullbacks here. So if we start from this part, this is our valid pullback, right? This is our boat area. So we're going to sell here, right? All the time. We don't know what's going to happen later on the right side of the actually chart, okay, when it is happening. So it is live, and now here, after breaking this one, we have valid pullback, which is bullish, right? Bullish valid pullback. Okay, now here, if we plot this one, FTR, we have the reaction of this. This one was the actually lowest price that experienced in this scale, right? In this pullback. Now this valid pullback is formed inside this valid pullback. So we could consider this one, we could consider these ones, or any movement up and down before the price is coming down, okay? So you could say that, oh, why did you take this one? Okay, you could take this one, doesn't matter. Okay, so but price couldn't reach to this, right? Why did we use this one later in the advanced system? You will learn about that. But the point is that it doesn't matter at all. So this up move and down move, if you just plot this line there, you will see that yes, we have this movement, yeah, and it has the reaction to that one. Now here, this was the easy part. Now look at this one here, okay? Now we just started from there. If we had started from this one, okay, this is our valid pullback as well, right? This one was before that, this one was before that. Now here, let's just plot our FTR. If this one is the price that led to the highest in this scale, or this one, it doesn't matter. We have just candle in front of it. What should we do? We just consider all the candle, okay? All of it, because if you go to the lower time frame, you will see the movement and breaks up and down. So that's why we're not going to confuse ourselves and put this one. After we sweep it, we go downwards, right? If we just consider this one before more than this, right? This is the Philip zone, right? Here we have bearish, here we have bullish. So this is inside these two bearish and bullish. This is the Philip zone. Okay, now in the Philip zone also, now let's consider this one. This led to the lowest price, right? This swing led to the lowest price. So even if you consider this one, I mean this one, okay, this movement, okay, you could take this one. You would wait for the price to come down, or you could consider this one, okay. So it doesn't make it doesn't make any difference, okay. So you have to just consider the ones that it has one kind of FTR in front of it. So here you could get the reaction out of it. So, and you could take this one as well. So, I hope this works. So these are the same things without any plotting up any actually things on it. Look here, we have also valid pullback. So you already know how to work on that. So this also is the valid pullback. We have different, I think this is the hardest scenario ever it could happen to you on the chart, real chart, okay? So, and it happens on all the time. I mean, it starts from 1 second, one tick to the monthly and even yearly chart, okay? It doesn't matter. So here we have bullish one, here we have bearish one, bullish one. So we have all of them. So we have different scenarios, different places, and you have all this is the only tool you need to just use. And also later you can have candle confirmation or sweep of this to make a complete strategy. I think this video was all you need to do and become super profitable as far as you do the exercises, practice, and backtest it. Yeah. So here we have another scenarios, and I think this is for the next lesson. So take good care. This video was long. Sorry for that, and hopefully you can enjoy that. So stay tuned. I'm going to just put your exercises in the link description on the weekend. So I will add to your exercises and drills later on and let you know. Take care. See you.